Startegy traders, this is Munya and welcome back to my channel. So if you're new to this channel, I provide forex trading education, indices trading education, and I teach you guys how to make money in the market. So each and every Tuesday, I was supposed to upload this on Tuesday, but I forgot. I provide you with the strategy, and then Thursdays we do indicators, and then 3 other days we do anything pertaining trading, be it tools, be it analysis, right? So today I'm back to continue with the part 2 of the strategy that I introduced to you recently. I'm already getting great results. I'm already hearing great results from you guys that are using it. So we just want to continue. I left it off before I talked about when to close your trades and stuff like that. So that's what we're going to discuss today. And if you're new to this channel, and if you haven't already subscribed to this channel, kindly click the subscribe button and turn on your notification bell so that you are notified each and every time I post a video. And if you like this stuff, please click a like button and share with your friends. All right, I was just looking at V25 1S and we were in a nice sell. If you're in my VIP group, you know what I'm talking about. It dropped like crazy right here. I think our entry was somewhere here, mine was somewhere here, and then we dropped with it. And I wish I had gotten an entry up there, but it is what it is. We made a lot of money. If you're in the VIP group, you know what I'm talking about. Okay, and by the way, if you want to join our Telegram channel, the link is down below. That's our trading community. You can also follow me on Instagram. That's where sometimes I post questionnaires asking you what you guys want to see on this channel, right? So you get a chance to participate in that. So without wasting any time, let's get right into today's business. So remember, I introduced the strategy to you. If you haven't watched the video, it's there. I'll link it down below also. So this is what we have on our strategy. Just to have a recap, we are using Ichimoku and we are using MACD and some moving averages, basically, right? So those are our main indicators that we have right here. So maybe Ichimoku, you can see the settings, and then MACD settings, which is the same as this one also. So in the end, you should have something like this on your charts. I was also testing this strategy on some indices. I'll tell you the results sometime. Maybe today we can also do it. And we said we're using this strategy for boom and crash, right, currently. And we said for boom, we are looking for sell setups. Why? Because we are scalping. Basically, we're trading ticks, right? So buy setups, we're not entering. We're only looking for sell setups. And I'm already saying that there's a sell setup confirmed. Let me just confirm my zoom level, which we talked about. We said this, the second from last, right? So this is my last zoom level, and then the second from last is this one, right? So this is the zoom level. If you are watching this video in time, take a look at boom 1000. We're about to have a sell setup. If everything is confirmed, we're now waiting for our main window, which is this one, main chart, the top one. And we said on our main chart, we're looking for a crossover. We want our EMA 5 to cross over to be below the EMA 13, which is the yellow line, right? So we want the red line, which is this, to cross over to be below the yellow line. Something like what happened right here. So that's what we're only waiting for. And the moment that happens, we're going to enter into a sell. Now, here's the part that I left out, which is when to take profit, right? When to take profit. So there are 3 main ways that I've compiled on when to take profit on these trades. The first one is you use the strategy in reverse, right? What do I mean? I mean that if you enter into a sell, let me look for a sell. Let me look for a clear sell that we can all agree on, right? All right. If you enter into a sell like this. We said our first entry is this one, because we have our lines meeting at the top here. So this was a clear entry, or agree, right? You enter into this, and at this point, price bounces on our EMA 50, the green line. You are supposed to exit that trade. Why? Because I said this is the point where either you take profit or you add more positions. If price breaks this green line, it's a clear indication that we are not going down. So it means we are now in a downtrend. So continue with that trade, right? Continue with the trade. But the moment price bounces like this, it means you should exit that trade. Why? Because some of you might say this would never caught it. No, this is the 5-minute time frame. It's not a spike, so you can actually see it coming. It's not a spike. We are in a 5-minute time frame, so it's different from a spike that happens in a flash. So this is a 5-minute candle, so it means it formed in 5 minutes. So you can clearly see this, right? So that's the first way to exit. The other way is to use the strategy in reverse. I just said to point that out. The strategy in reverse. What do I mean? That if you say these conditions, the crossover, the lines meeting at the top, lines meeting at the top, is an indication of a sell. So then it simply means that when these lines are now at the bottom, and when you now have an opposite EMA cross, it simply means exit the market, because we're now changing direction, right? This would be, if the strategy worked, this would be an indication of a sell, right? So it means this time is the time to exit. What did I say? I'm saying use the strategy in reverse. If these conditions, or where we have the red line crossing to be below the yellow line, and these two lines at the top, and these other two lines at the top, it means when you see those two lines now at the bottom, and also these two lines at the bottom, and an opposite EMA cross, it means you are now supposed to exit this market. So this is for swing traders, those people that can really hold. So you were supposed to hold from here up to here. This is the point where the line started to meet at the bottom, which means we have exhausted that that signal, or that trade. I don't know how we can call it, right? Do you understand? Comment down below if you understand what I said. Comment down below so that we move together. So I'm looking for more setups. Okay, same scenario here. We had a nice price break on the green line, which means the confirmation that we're now in a downtrend is there, right? So you're just supposed to hold. So now, when do I close this after knowing this confirmation? This is where I'm saying you now use your strategy in reverse. When you said you'd enter a sell when these lines are at the top, right? So it means when they start to be at the bottom, the signal has been exhausted, the trade has been exhausted, the trend is over, basically, right? So it means price is now, your strategy is now trying to pick up another signal, right? At this point, it's now building momentum for the next signal. So maybe we'll be going up again, and up until we reach a peak where we can sell again, right? I hope you understand this, guys. So this is what I'm saying. So basically, you can exhaust all these candlesticks. I'm not losing my voice. You can exhaust all these candlesticks, right? Up to this point. So basically, you can, in simple terms, you can simply use the indicator window 1 and 2. If they are now at the bottom, it means my trade has been exhausted. I now wait for price to start building up another peak where I can sell again. I hope you got that. Let me look at crash maybe, so that we have a clear understanding. For crash, it's simply the opposite, right? Why? Because we said you are entering, for crash, you are entering trades at the bottom, right? When these lines meet at the bottom, these two lines and these two lines, and also an EMA cross here. So it simply means when these indicators are now rising, they are forming another peak, right? They are forming another peak up there. When they reach up there, it means my trade has been exhausted. And you can see the moment they were now at the top, after they formed a peak, price fell. Whereas in this case, you were in a buy, so you would have lost some money. Why? So it means when these when indicator 1 and 2 are now rising and up to the top level there, it means price is now forming another peak and you have exhausted your trade. So you were supposed to enter here, add more positions here, and then go all the way up with it. And then when these indicator windows are now at the top, you know that I have exhausted my trade and I'm now supposed to exit. I hope I made that clear. That's the easiest way of doing it. That's the way that I do it. I make sure I exhaust my trade, but it really requires someone with a lot of patience and a lot of trust in the strategy and a lot of risk management, right? I think we have a session on risk management sometime. Comment down below if you want it. The third, and I think it's the third way of taking profit is risk reward ratio. I've been saying this, I think from the beginning of this channel. I said your risk reward ratio, which is your triple R, is basically a ratio which tells you how much you're willing to lose and how much you should gain in each particular trade. I use the 1:3 reward risk ratio, which I believe is the golden reward ratio. Why? Because with the 1:3 reward ratio, I am always profitable, no matter how bad the market is that day, or no matter how bad I am at trading. Why? Because let's say I take 10 trades that day, I will only need three of my trades to be profitable. Even if the remaining 7 hit losses or hit my stop loss, I will still be profitable. Why? Because for the 3 that I have won, it's 3 times 3, which means 9. And for the 7 that I have lost, is 7 times 1, which is 7. That's the 1:3 reward ratio, right? So it means I always have a net of that's 9 minus 7. That's 2. So let's say by 10 pips, if I'm trading in steps of 10, it means I always have 20 pips. I'll always be 20 pips in profit. If I'm trading in steps of 100, I'll always have 200 pips. For me, if I'm trading in steps of thousands of pips, I'll always have 2,000 pips for me in profit. Do you get that? So you can use the risk reward. It's not the only risk reward ratio, but it's the risk reward ratio that I prefer, 1:3, which basically means if I take a trade, let's say where I'm on boom, right? So I'm looking for shorts. Okay, if I take a trade here, there was a confirmation for a sell, right? If price moves, remember this is a 5-minute time frame. If price moves 1 candlestick opposite my trade, so going up instead of going down, because we're on boom, right? We are looking for sales. If price moves 1 candlestick up, I'll cancel that trade. I'll consider that as a loss, right? But if price goes 3 candlesticks my way, 3 candlesticks down, which is from this point 1, 2, 3, so basically that's 15 minutes, since we're on a 15-minute time frame, right? I usually enter trades at solid hours. I don't know how I can explain this. Okay, when I know that there's a candlestick close in my 5 minutes, so that will be at 5 minutes or at 10 minutes or at 15 minutes in steps of 5. That's when I enter my trade. I don't enter at something like 4 minutes or 3 minutes, because the candlestick will not have closed, so I don't know the proper direction of the market. We'll talk about it some other day. Okay, so this is what I was saying. I would count my 3 candlesticks and take my profit. So that's if you're using the risk reward ratio. This is just another way. And then The fourth way of taking profit is the trailing. This is for swing traders and position traders, the guys that know what they're doing. They will hold a trade and maybe have a stop loss of 50 pips. So we know that in our 1 minute time frame, each candlestick is worth, each tick, sorry, not the spike, each tick is worth about 50 pips, right? So if you are in a 5 minute time frame, it's just 5 times 50. So each candlestick in the 5 minute time frame is roughly 250 pips, right? So with that, you can then say might outtrail at maybe 50 pips or at 100 pips. Okay, all right, I think I'll end here today. We'll continue on this strategy. Remember, I said there are so many ways of using this strategy. This is just one of the ways. We'll get deeper into the strategy. And until next time, don't forget to watch the first video, join our Telegram channel, follow me on Instagram. Peace.